This is daily time frame of gold before 1677. Its last support is 1721. Price had breakout 1753 support and now it is trading between 1721 and 1753. This week we have CPI numbers. If CPI jumps again, then after sideways correction, it can break the support and retest 1677. This will be our last support. So all of the seller can take profit and new bulls can take entry. But next FOMC decision depend on this week's CPI and what happened last week on NFP. So these three are our key support and upside resistance is 1786. And if we go to H4 time frame, then you can see our trend was started at top at 2017. Since then it is making lower low, lower high. All the people who sold gold right here, maybe they have insider info about FOMC minute and NFP. Maybe they also knew about upcoming CPI, because if CPI again jumps and goes to 9%, then Fed will raise 100 basis point. Now market is pricing in for 75, and if this happen, then we have this dynamic trend line and these two horizontal support before final 1677 support. And if we go back to daily time frame, this is technical support and rumor is Fed either decrease rate size in next FOMC, and many investors are pricing in for rate cut in January 2023. So by the time price tests this support, that will be important, because fundamental reason for gold trend reversal will be Fed QE, and which will be start from rate cut, because in every FOMC meeting Fed is raising size of its rate hike. So in this July FOMC we will get 75, and what happened in September FOMC, that will be important. And if we go to weekly time frame, and there are few retracement from top to bottom, the bottom at 1046 to top at 2075. Then our 50% retracement is 1560, and before that we have horizontal support and 38% retracement at 1682. Because if this level breaks and Fed does not stop and inflation keep going up, then next target will be 1560. And these two trends are completely different. On last time price goes up on rate hike, and this time these are going down, because psychology is everything. And key news of this week is consumer price index on 13 July. Last time we had 8.6 and expectation number are 8.7, and if it jumps to 9%, then Fed will raise 100 basis point, or if it came down, then we already have 75. And what they will do in upcoming FOMC will be based on this number. And for oil price, oil waste inflation, we have to wait for next month. And our FOMC meeting is July 26, and what happened in September will be important because next month NFP and CPI, and we have effect of lower oil price. And in September FOMC meeting, if Fed gives signal for lower than 75 basis point rate hike, then it will be beginning of QE as a trading psychology. But by the December FOMC meeting, you will have clear signal. Until these two FOMC meeting, price will take this 38% retracement or 50% retracement will be important to watch, because if price again make bottom at 38% retracement near 1680, then this can be triple bottom. On weekly time frame it will retest or break, but on H1 time frame it can give you a short term buying opportunity. And till FOMC meeting it will be clear. So on weekly time frame, these three are key support: 38% retracement, 50 and 61% retracement at 1439, 1560 and 1682. And if we go to H1 time frame, then this is our first resistance zone from 1784 to 1789, and this trend line is a dynamic resistance. So till next FOMC and CPI number, you can expect a sideways correction below this resistance level. Again, if CPI jumps up to 9%, then Fed can go from 75 to 100 basis point. And if it shows a sideways trend on CPI number, then we have 75. And if drop to downside, which is possible next month because of lower oil price, then rate cut can come as early next year. First will be CPI, then FOMC meeting.